Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza, and these are the top headlines that we're tracking at this hour. Summer 2076 begins on a strong note for the markets. The Nifty is trading around the 11,800 mark for the first time since July. All sectoral indices trade with gains. Tata Motors remains the top Nifty gainer. The stock has surged nearly 30% in just last two sessions and has broken above all its key moving averages. Reliance Industries is the biggest point contributor to the Nifty upside today. The company has approved transferring all of Jio's debt to the parent by March 2020. And Bharti Airtel has deferred its second quarter earnings to November 14th to study the Supreme Court verdict on the AGR charge. Both Airtel and Infratel remain the top Nifty losers. Good afternoon, Neeraj. It's been a great start to this new year. The resistance mark of 11,700, I think we are way above that now, reclaiming the mark of 800 today. Yeah, Navneet, and frankly, while as much as we would like to talk about Reliance and TCS doing well, it's a clutch of these broader market names which have inched up too. So a lot of riffraff along with the quality is moving up in the session today. But hey, no complaints. It's a good start. It's a brisk start. It's much unlike what's happened to the rest of the Asian pack as well. So let's wait and watch. Remember, a few days ago, I know the market is very excited about a tax cut story done by one of the publications and one of the channels. Bloomberg spoke about this possibility about a week and a half ago when we spoke about how this could be considered in the budget. So, but today the market is taking cognizance of this. 1.5% higher in trade. The bank Nifty to about 1.5% higher. And let's get the heat map up on the screen to show you the kind of moves that Tata Motors, Reliance, TCS, etc. are making. There's Yes Bank also, which is up 8%, and some of the steel names have done so well. But Tata Motors up 16%. All commodity names, JSW, Tata Steel, Vedanta have done exceptionally well for themselves. TCS up about 3.5% in trade. Strength in Bajaj Finance, strength in Maruti, strength in Reliance Industries, the big boy, up about 3% up in trade. So really good going there. A handful of losers, the likes of Bharti Infra, which is down another 9%. So 8%, 2% on the Murat trading session, and another 9% for Bharti Infratel. That's about nearly between 25 to 30% loss in the last 4 trading sessions for this one. And today Airtel too, on account of the deferment of the results, the street has not taken it too well, is down about 4%. So not good going there. Very quickly, just the broader end of the spectrum, I just want to pull up the MRR of the mid cap and the small cap indices to just show you what's moved and what's not. So Varroc Engineering, it was a recommendation today by Rasmik Oza, up about 9%. RBL Bank, LIC Housing Finance, strength in endurance technology. So some auto components have done well. What has not done well? Apollo Hospitals, and we'll be talking to the management in a few minutes from now. So that's gone down 5%. Jubilant Life Science has some losses. Aside of that, not too many stocks which have corrected too deeply. Even at the broader end of the spectrum, you'll see Adani Enterprises and a few others at the small cap space of the Nifty 500, which have done well. So a lot of those stocks have done well. Indiabulls Group as a group has done very well for itself. Deepak Nitrite corrects about 1.5%, and Dish TV continues to grind lower, down about 6% in trade. But if this is what the individual stocks have done, it's also important to take a look at the positions that are happening underneath. How is the F&O market position in today's session? Well, Neeraj, it's an important week considering the monthly contracts. They will expire this Thursday. So you've got the gains that you've come of 1.5% each on your frontline indices. That's Nifty and Bank Nifty, is coupled with open interest gains as well, telling you there are some fresh long positions being taken. But before we look at that, remember Nifty at 11,800 now is away just 3% from its all-time high levels of about 12,100, and Bank Nifty is away 6% from its all-time high levels. So we'll watch out whether that can be reclaimed once again in the near future or not. But looking at the futures, Nifty futures open interest right now has seen gains, and of course the rollovers will continue to pick up 10% higher when it comes to the October futures. For Bank Nifty as well, we've seen an increase in open interest of about 11%, telling you there are some fresh long positions being taken here. But remember, today's gain also come with volatility going higher, which may not be a very comforting sign for the bulls. So India Wix is at 16.12 with gains of about lot closer to 3%. In terms of options data, remember how we've been highlighting that 11,700 was a key resistance mark for the markets, but we've crossed that mark and we've been trading above that mark, I think, for throughout the sessions once we cross that level. And on back of that, the call writers of 11,700 strike have run for cover. We've seen shedding of nearly 4.3 lakh shares there, and put writing has come in for the 11,700 strike. Nearly 33 lakh shares have been added. If you go by the premium, of course, it's fallen by 85 rupees. It's currently at 22. So even if somebody is writing the strike at current levels, is thinking that the expiry could take place around the levels of downside, could be now limited to levels of 11,670 or 680. So watch out for that. Very quickly then, on the stock futures side, there are a lot of stocks active, and I have to mention Tata Motors, a stock which is up 30% in just last 2 sessions. I'm focusing on the options data because no major buildup has come in on the futures side. Maximum open interest is at the 150 put and 170 call. This is for Thursday's expiry. A lot of technical analysts that we've been talking to, they said at 170 it could face a resistance, so one should look to book profits. But I think the underlying is now crossed that mark, or just about trading at levels of 170 or 71. Apollo Hospital, it's off the day's low, but it's still slipped below the mark of 50 DMA. There are some fresh short positions on the future side. And lastly, Indiabulls Housing, it's your top F&O gainer. It's recovered nearly 35% from 52-week lows that we've seen in this month, but the stock today is up about 18%, Neeraj.
Well, let's get in the market, boys. It's a good time to get in one. Anurag Jain of Canara, HSBC, OBC Life Insurance joins us right now on the show. Anurag, good having you. Thanks much for joining in.
So much.
And Happy New Year to you and your team.
Same to you. Thank you so much.
We've started off on a very good note. Are you guys constructive on the markets from these levels? And if so, what are the reasons for the same?
Absolutely. So let me, take you back a year and a half. So since a year and a half, markets have been very narrow. Just 4-5 stocks or 10% of the benchmark companies have actually driven the market up, while the broader market has significantly underperformed.
Right.
Now we believe that going forward, the broader market is what will drive the markets up, and those few narrow stocks which were taking the market up are actually going to underperform. So we remain very constructive on the broader market. The mid cap and the small cap stocks, as well as even within the large cap indices, the broader market stocks is what we are very positive on.
So what has actually done well, and you're right that there's a handful of stocks which have done well, but even the non-nifty, the quality mid caps which have, or the quality non-nifty names which have delivered on financials are actually trading at premium multiples.
Absolutely.
Do you expect the ones which are trading at non-premium multiples to therefore move up? And would it be led by earnings, or would it be led by a valuation multiple re-rating?
Absolutely. So that's a good question. So we are not very positive on those stocks, be it nifty or non-nifty, which are trading at premium multiples, because the slowing growth is actually catching up, and we are actually seeing earnings growth slow down there with premium valuation. So that is a recipe for underperformance. On the other hand, broader markets, while earnings recovery will take some time, we'll see a gradual recovery in the economy. We already seeing interest rates having come down, liquidity has improved, corporate bond spreads have started to compress, which had really gone to crazy levels. So basically it means that plus government spending is also sort of picking up. Monsoons have been good. So we believe that gradually things will improve from here. Worst of adverse growth, worst of low GDP print is behind us. From here on, things will improve gradually, not a V-shaped recovery. It will be a slow, gradual recovery, but valuations in the broader market space are very, very attractive. And usually, earnings tend to follow. It will be a valuation re-rating. Markets tend to see things ahead of the actual numbers coming in. So maybe 6 months out, we see earnings catching up, but stocks would have moved up by then. So we remain quite constructive on the broader market, driven first by valuation up move and then followed by earnings gradually reviving.
Okay, so if it's a valuation bet first, Anurag, are there any specific themes or sectors where you are witnessing valuation comfort right now?
So as I said, broader market, there has been significant underperformance. Last 1.5 years, Nifty is up 15% plus. Broader market was down, 10%. Small cap index is down even further. So there's a lot of valuation comfort available across. And there, some of the segments that we like, for example, is, but then it's often talked about is corporate banks is one space we really like. We've seen 3-4 years of underperformance. Now things are turning around. Asset quality is gradually improving. Growth, which was slowed down, credit growth is gradually picking up there. A lot of pricing power has come in. Deposit costs are coming down, so leads to profitability improvement. As and when we see recoveries happen from from IBC cases, that would be further substantial trigger for those stocks to outperform. So we remain constructive on that space for next couple of years actually. So that is one space which we are quite constructive about. The other space we are quite constructive about is the chemical space. Again, may not be very cheap on valuations, but we see that over the next couple of years, there's lots of earnings growth coming in that space. So earnings will compound at maybe 25% plus, CAGR, and this is driven by the macro construct. So because of trade wars happening, a lot of chemicals business is coming to India from export point of view, and because of pollution also many plants are getting shut down in China. And in India, a lot of capex is happening in this space. Companies are doing a lot of capex. So this is...
So Indian plants don't run the risk of getting into the net of high polluting companies?
We have been from the very beginning, quite conscious of environment and pollution controls. Our agencies have been on top of their job. So we find that things are far much superior and better, here. And so that is the space. A lot of capex is happening there, which will translate into further earnings growth over the next 2-3 years. So again, a space which will compound at 25-30%.
Right. Anurag, without talking about individual stocks, but autos is something we've been speaking because of the sheer outperformance that has come in from the JLR business of Tata Motors. And not only Tata Motors, we've seen better performance, margin improvement from the two-wheeler companies as well, Hero Moto as well as Bajaj. This was a space, it was a debate whether it's a cyclical or a structural, turn which the sector has taken. Is this also giving you any bit of valuation comfort, considering we have seen improvement in a couple of these companies when it came to numbers in an environment where volume growth was lower? Absolutely.
So, you've been bang on. The space saw significant correction because of volume pressures. We saw 20-25% kind of year-on-year volume degrowth, which we've never seen in history. But all that was in the price. And despite that kind of volume pressure, companies, because of raw material prices being softer, because of cost cutting and efficiency measures, we saw far superior margin performance than expected this quarter. And also, we're given to believe that the festive season has also been reasonably good. We're seeing probably single-digit kind of volume growth. But having said that, stocks have already moved up, in the range of 25-40% from the bottom. Our sense is that we still remain a little cautious here, especially after the price movement, because we believe that some of these issues are structural in nature. Cost of ownership of vehicles has gone up quite substantially over the last year, and it is going to go up further with new safety norms coming in, BS6 coming in. So we believe that still needs to be behind us before we can be constructive on the space. So while festive season has been good, we need to see a couple of more months of volume data to see if actually there is a demand revival happening in the space, and this space clearly follows volume growth. So if we see volume growth trending up month on month, this space will perform. So we still want to see some more data points there, and especially after having moved up in the range of 35-40% from the bottom. Not so constructive there now.
Okay, one pocket where they are not constructive. Okay, Anurag, final question from my end. Metals, are you guys bullish today? The stocks have moved up on the trade optimism, I reckon.
Again, there could be these bounces here and there, right? But globally, if we see growth is slowing down, and metals are a clear proxy of growth. You know, China is a very big economy which drove metal consumption and prices for last so many years. China is slowing down, US is slowing down, even domestically growth has not been so good. So while stock prices have fallen a lot, valuations have come off, but we still believe that there is time before things can improve from here. Maybe selective nibbling of stocks on valuation correction, but expect returns over a period of time. It's not going to come in a hurry.
Anurag, Jain, thank you so much for taking the time out and being with us today. Appreciate your thoughts.
Thank you so much for having me on the show.
That's the view from Anurag Jain of Canara Life Insurance. Selectively bullish is how I would presume we can put it as. The stock in focus today, though, is Apollo Hospitals. It saw its biggest intraday fall since February this year after the Ken reported some concerns on the potential demerger. A blog named Multi-Act has also raised some concerns on related party transactions and a higher level of pledge shares. It's recovered a bit from the lows of the day. However, it will be important to get some thoughts from the management. So the executive VC of Apollo Hospitals, Mr. Shobana Kamineni Johnson, right now on the show. Shobana, good having you. Thanks much for joining in. 2 or 3 things, and I think you would have gone through all of these, will be important for a set of our viewers and our readers to get a sense from you on some of these. Now, the concerns on the demerger of the pharmacy business, which I think the report by Ken highlights, the shareholding post the demerger. Can you talk a bit about this?
Sure, I can. So, last week, the NCLT, post the NCLT approval, the pharmacy front end was demerged from the Apollo from AHEL, and this was because of the Government of India guidelines on multi-brand retail. Because when we started the company, retail we never thought of ourselves as a retail company. It was mostly as a service towards for people, to have genuine medicines. But as we grew the chain, we realized that this is something that we would have to manage. So we created a structure that would still be, which would allow us to capture the greatest value for our shareholders. And this is what we've done under the highest transparency, speaking to our investors, speaking to shareholders, and we got a 99% approval from shareholders for this transaction in our AGM last week. And as you saw, that throughout the week, our stock really held. So it's a very clear, transparent structure. It also allows us to be able to focus on creating an omni-channel experience for in pharmacy. We'll be the first to be able to do it. To be able to do it at scale with our 3,500 pharmacies, then create an e-commerce platform, make sure that we're in compliance with the law, but also make sure that we can serve the 20 million customers we have today, moving on to the hundreds of millions of customers that can benefit from such a service and from having a great, to making sure that you get genuine medicines. So this is something that was done with full approval of our shareholders and of the Government of India structure.
Shobana, I'm just taking forward that pharmacy business point. I think there are some concerns also related to how the shareholders of the front end and the back end business are different. So there could be a bit of conflict also going ahead. So how do you, in midst of... Make your point, please.
No, I don't see a conflict at all. Because what this we had to create we had to create a structure that was compliant to the multi-brand retail guidelines of India, and this is the way that we could do this. And having said so, it also creates the ability that tomorrow, if we want to make sure that everyone was looking, the shareholders of Apollo Hospital are always looking to see that this business that they invested and grew. Should be able to ultimately realize its full potential either through an IPO or through a strategic sale later in the years once the multi-brand guidelines open up. And this is the structure that is going to allow it.
Okay. This report, a particular blog, also talks about the concerns around the related party transaction, and it states that until 2014 there was only one related party. The number has now gone up to about 14. Could you just clarify on that? And it also says the number of payable days have gone down. What's the reason behind the same?
So I think this number of payable days goes up and down. I don't think that is something of a serious concern. And it's just, whatever works for the business. Because if you look at Apollo Pharmacy, this quarter has been our highest ever, 6% EBITDA, and no one in this industry has ever come close to that. So look at the way that our pharmacies are managed, and you'll know that a lot of it is because we have this structure of a back end. So 19 years ago when we started, AIOCD was very strong. And it did not allow, today there's 70,000 distributors in India. Basically, in every location that I had to deal with 200 distributors. There was no transparency. I was getting no consistent pricing, and it was a nightmare to manage, and also the kind of spurious drugs that could come through our system. So we cleaned this up 19 years ago and created this structure. But we also saw that because we really, Apollo getting the Asian Business, the Corporate Governance Award is because they're consistently transparent. So we said we can't do this business that has a high amount of RPT unless we're governed. So this is audited externally and internally once to twice a year. All contracts are vetted. On top of which every discount we get is transparently sent right through the system, not for one product, two products, but it is for the for 24,000 products that we actually sell in our pharmacies. And I think no other pharmacy company can talk about this. Another thing that KeyMed does for us is that it has invested, that it also does business with 35,000 other pharmacies. But the 3,500 pharmacies of Apollo, they've created the inventory, which is 95% availability. It has the service level of having that the condition of the medicines that comes to it, and also there's no inventory carrying cost for the pharmacy, so that directly gets, apart from the other discounts, we actually have a saving in that. So net, there are multiple savings that have come by outsourcing this line of business. And I think many of the online pharmacy players are kind of trying to do the same. They're trying to copy us, but we've really invested in some of the best and cleanest suppliers in every state and in most of the big states, and we own between 51 to 70% of their business.
Mm-hmm. Would Shobana, would KeyMed, which supplies, I believe KeyMed supplies nearly half of your requirements, would this be an abnormally higher percentage across the industry for a supplier to have over 50% exposure? Would it be higher than almost anybody else across?
I think you have to look at it saying that the cost of not doing it is much, much higher, because one is that we get transparency in prices. So to us, that's super important. And then after that, the way the medicine is stored. Today, if you go to most distributors, you do not know from the manufacturer to the actual retailer how these medicines are stored. So if they're not stored under temperature controlled, the efficacy of the medicine is half. What I'm selling people is actually is spurious. So I think this control is such an important factor in a business which requires as much trust as this. So I would look at it, it's the same with an auto parts. Why would they have everything within? Why does Honda cars have its same group of suppliers around it wherever it moves, supply chains around the world? It's because you need that trust, you need the availability. So I think you have to apply the same metric in this, and then you have to look at the transparency and where it's going. If you look at KeyMed's bottom line is probably making 0.5% EBITDA or PAT. So that's the kind of thing you have to see, that everything is transparently moving to the main, which is Apollo Pharmacy.
Okay. The other, of course, something that you've responded to a number of times, I think you guys have taken some steps to reduce the high level of pledged shares as well. Any updates on that, where it is consistent to what it was and what's the plan ahead? Because I think that's been reported as a concern, but I think it's been there for a while now.
And it's just waiting for this the insurance transaction to complete. And once that comes a significant amount, we are looking toward, I don't think that if we could make our pledge zero, it's the best. But I think in terms of most corporates, we're looking at about 20%. Hopefully it'll close. We should have closed this transaction last month. And HDFC still is waiting for some approvals, but most of them have come. We've already got 2-3 of the critical approvals.
Right.
So that will be used to retire this pledge.
Okay. So what's the current promoter pledge then? Because as per the exchange filing, it was 60% by the end of June.
Yeah, it will be just that level. And what we've done is we actually sold 3% recently. So having said that, we reduced our pledge significantly. So under all these parameters, we're moving towards that. I don't think there's any concern at all. And as you'll see that most of the investors that we've spent time talking to them, we've explained the structure of what we've done with pharmacy, they're completely on board. There's been a high level of transparency, and it came from the investors that we should reduce pledge. So we sold a perfectly good company for that.
Yep. Shobana, just leave us with how the company is currently managing its debt, because of course that blog also stated how the operating cash flows are not enough to meet the near-term obligations of the company. If you would refute on that, what's the current debt? How do you plan to bring it down? What's the timeline for the same?
Shown that it's more than able to manage, and we have finished. If you've seen that we're not adding more capacity, we finished our capacity addition after the Proton was launched, and now it is only in terms of growing our revenue. And for the last 4 quarters, if you see, there's been a constant uptake. And at this current rate of growth, I think that not only will we be able to service whatever debt we have, but there will be sufficient free cash flow. So Apollo is in a financially very stable position. And the last 2 quarters have clearly seen that, and we've been rewarded for it. And so I see no concern at all. I think that this is something that they piece together multiple parts of information, and the ultimate QED was kind of misleading. But if you really look at each one of these points, they're completely addressable, and we've always been talking to investors about these.
Okay, Shobana, we leave it at that note. Appreciate you joining us today and clarifying the reports for us. Well, that's the management of Apollo Hospital. The stock continues to see those declines of about 5 to 5.5%, but it's off the day's low that we had seen. Of course, share pledge is something which the street has been concerned about it for the last 2 or 3 quarters, and the commentary was quite encouraging, and that was the reason why I think after the first quarter numbers, or even the fourth quarter FY19, the management said they are working towards reducing the pledge, because of which we did see some recovery also in the last 1 year. But moving on and talking about the markets, Diwali has lit up the markets as Nifty steadily inches towards its all-time high mark. Summer 2075 has ended and Summer 2076 has begun with a bang. Over the course of the year, foreign investors' restraint has been a key talking point. But will the new year bring them back to Indian markets? We put the question to popular global investor Mark Mobius. He says he is very positive on India. Listen in.
I still am very positive on India, because not only because of the tax cuts, but I think something that's underlying the BJP approach is making government more efficient, digitalizing government procedures, making things easier and simpler for the people on the ground. for business people, but particularly for smaller business people and for the people in the countryside. I think this is a very, very significant change that's taking place, and it's pretty much unnoticed, I suppose, but will have a big impact on the future growth of India.
All right, and we've already started seeing the effect of the corporate tax cuts on the bottom line of these companies. We may even start seeing increase in risk appetite of businesses, which is always a precursor to growth. How do you see this playing out, Mark?
Of course, there are two things that work here. One, of course, the tax cut, but also don't forget interest rates. Cut in interest rates also has a very big impact. And I personally feel that India has more to go in terms of how much interest rate cuts they can tolerate. I don't think they should worry too much about the budget situation. I think in order to get growth, lower interest rates would be very, very good. And that would be in line with what's happening globally in emerging markets.
All right, last Diwali came just a few months post the shadow banking crisis hit the system. Do you still feel that recovery is going to take some more time? And till that time, this last mile funding engine actually fully kickstarts, growth could remain a challenge?
Yes, we can expect quick results because you must remember the tax cut, of course, helps. And of course, we would expect companies to make more capital investments. But many of these companies and banks, of course, have to get away with those bad loans that they've made for the banks. And for companies, the debts they've incurred, they have to cut those down. So some of that money would not necessarily go into capital investment, but in paying back these loans and also straightening out their balance sheets. But after that, I think then you're going to see a surge in investment, which will be very good for the market.
Taking this a bit further, what's the view on the banking system now and the pace of resolutions? At the beginning, the resolutions of the NCLT cases happen at a much quicker pace, but the process just seems to be getting longer now. Your view on how this is, what kind of impact this has on the banks?
Well, that's it. I think what we have to do is wait until these banks get their balance sheets straightened out, and this takes time. It's not easy because there was a lot of dead wood there. You must remember, but I expect that perhaps by the beginning of next year. After all, we're almost finished with this year. Beginning of next year, you're going to see a surge in lending and also in more capital investment by companies. By the way, another aspect of this is a possible cut in personal income tax, because I think one of the things that the Modi government has to do is encourage consumer spending, and tax cuts in that level, at the consumer level, will be very, very good.
All right. Mark, you've always maintained that one should look out for value in the mid and the small cap space. Looks like that's just starting to play out now. Does this mean that the so-called mega caps, which up until now have been value creators, will start to see interest waning away?
I think so. I think you're going to see more diversification by investors, not necessarily away from the big caps. I think you're going to get big cap investments, but I think the small and medium-sized companies will probably do better given this new environment. As I said, government measures to make life easier for these people will certainly work their way into the system.
All right. And how much of a concern is the revised IMF growth rate for India at 6.1%, which nonetheless is still not a very small number?
6.6% is really very, very good for so many countries around the world. Many, many countries would love to have that kind of growth. I know the latest quarter, I believe, was 5, and we're expecting 6 for the whole year. No, I think this is very good growth. And you must remember, you can't have too rapid growth because that leads to excesses. But I believe that that level is very good, and I expect next year it'll probably be better, a lot better.
All right, and we hope that too. India, according to many markets, not a one-year story. The government has taken proactive steps, and while initial disruptions have caused it, it has also laid down a stronger foundation for the next big spurt of growth. Do you agree with that?
Yes, I believe so. I think that it is very much in the cards. We're going to see terrific behavior of the markets and of the investment market, particularly in India going forward. It's going to be very exciting.
And which are the pockets that are exciting you now, Mark?
Of course, still looking at medium and small cap, but I'm particularly interested in the tech sector. I believe that there's going to be a lot more exports. I'm not only talking about software tech, I'm talking about hardware tech from India as the manufacturers shift away from China into other markets. There's an incredible opportunity for India to take up some of the slack that's happened as a result of the trade war between the U.S. and China. And that's where you're going to see not only, low-cost manufacturing, not only garments, not only shoes, but some of the technological items, whether it be cell phones, whether it be any kind of electric equipment, etc.
All right. Mark, how much of a risk do you see on the global front with regards to Brexit and the trade war overhangs?
Brexit, sitting here in London, you really don't know what's going on. Nobody seems to know. It's so confusing. I think it's so much talked about. The bottom line is that nobody knows what's going to happen. They do expect a split between the UK and Europe, but nobody knows how it's going to be developed. My guess is that it's not going to be as dramatic as everyone expects. In other words, the trade flows will not change overnight. There'll still be a lot of lines tying Europe with the UK, so probably not as bad as what is expected.
All right, then in that case, what's your view on the government's big divestment plan? Do you feel privatization is the best way of unlocking maximum value?
It's a tremendous way. It's a wonderful idea to have privatization programs to unlock that value. Not only to unlock value, but to make these companies much more profitable and becoming taxpayers to the government. But more importantly, I believe it's important for India to look at the international bond market. As you know, India has not been a big player in the bond market internationally, and it's about time that India started issuing international bonds to finance some of the spending. I'm not saying to go overboard, but to begin to tap that market, given the incredibly low interest rates that you now have.
All right, got that. Mark, one final question. I just want a view on gold. Last Diwali to this Diwali, gold has given double the returns of equities. Does one diversify into gold now?
I definitely do. As you know, I've been bullish on gold for a few years now, and I think you have to have gold in your portfolio. I'm not saying you put everything in, but 10, 15% makes a lot of sense. Because with the proliferation of money supply around the world, with cryptocurrencies, nobody knows what the money supply is. So gold is a very good hedge.
Okay, that's the view, of course, from Mark Mobius, and well, constructive is what I can simply say most people are on the Indian story. But we need to figure out if indeed there is more near-term positivity from a trading perspective. To get that going, our experts join in now for the last 1 hour of trade. Amar Singh of Angel Broking with us to talk about the charts, as is Sacchitanand Uttekar of Tradebulls. Gentlemen, both of you, good afternoon. Thanks for joining in. Amar, let's start off with you. Happy New Year. How are you approaching trade today? 1.5% higher for the Nifty. Would you trade on the upside at these levels?
Yeah, wish you too a very happy New Year. I would say that Nifty is definitely forming a base, and we've been talking earlier about the 11,650, 700 resistance. So that has been taken out, and technically, if you look at the charts, the short-term charts, the intermediate-term trend, that remains positive, and the long-term trend also remains positive. But on the monthly charts, there's some higher level, some resistance would be seen. But now, since 11,700 has been crossed and sustaining above that level, then yes, Nifty has all the potential to make new highs, because the momentum which is being witnessed on the daily charts and the weekly charts clearly shows that there is more on the upside. On the downside now, 11,650, 700, that would become a level of crucial support. So I would say dips definitely should be used as buying opportunity, with a stop loss below 11,650 and a target of 11,950 on the upside.
Okay. So, well, that's the view from Amar. Sacchitanand, same question to you, either on the Nifty or the Nifty Bank. At these levels, would you go out and initiate any fresh trade?
Good afternoon, Niraj. In fact, both of the indices are placed at a critical juncture. If you look at Nifty, we have already seen a very strong outperformance, and we believe that this particular outperformance can continue in Nifty because of the contribution of some of the IT names which are doing really well. So if you look at Nifty, I think the momentum can get carried forward towards 11,880, 900 kind of a zone. And unless we don't see a swing close below, say, 11,740 from here on, I think this particular positive trend should continue. But if you look at today's session, we have already seen a jump in VIX as well, which is close to around 5%. And this is where the concern is developing. So if you look at Bank Nifty, the underperformance has been there. And if you look at last, a couple of hours, we have really not seen any strong fillip in this particular indices. If you look at the options data, 30,000 still remains a very critical hurdle. So, from a trading perspective, I think, it's better to keep a long and short kind of a position in the market from here on. So from a Bank Nifty perspective, from a trading perspective, I think it is an ideal situation wherein 29,800 put can be bought in. A very modest stop loss of 135 should be placed, and a corrective move towards in the end, or probably we can see it tomorrow shaping out, which can be played via this options. So 170 is somewhere where the 29,800 put is placed right now. 135 would be the stop loss for the trade, and 280, 290 would be the probable target.
Okay, so those are some individual bets coming in on the indices. But before we proceed, remember one pocket which has not been doing well is the telecom space, and there are some important flashes there on your screen. Department of Telecom sources, this is coming from there, on Telco's request to government. It's stated that input tax credit to be adjusted against future government levies. Remember, these are just sources from the DOT stating that visible pricing for voice and data is something which will be considered, and deferment of spectrum auction payment due for the years FY21 and FY22. So there could be some bit of postponement there, and there could be a reduction of spectrum usage charges and reduce Universal Service Obligation Fund, which is USOF, to 3% from the current 5%. But all that is not reflecting much, at least on the stock prices of these telecom companies, especially Infratel, which has been reeling under pressure, I believe, for the last 3 to 4 trading session. It's touched its fresh 52-week low. Before we take technical view on these telecom stocks, let me quickly first take individual stock ideas also from both our experts. Amar Singh, what are the bets in terms of individual stocks this afternoon?
Yeah, I would say the first stock to look at is GAIL India. This is one stock. What we've seen is that the stock has corrected but seems to have formed a base, and it's technically at very crucial support zones, and there is some bullish divergence on the weekly charts as well as on the daily charts is moving from oversold territory. So currently it's around 126 odd levels. So this is one stock one can look at. So any dip towards 124 can be used as a buying opportunity in GAIL with a stop loss of 119 and a target of 135 in the short term. And the second stock to look at is HDFC Bank. This is one stock which continues to trade from. Yes, we've been seeing the stock consolidating for a few days now. So I would recommend that any correction in the stock towards 1215, 1220 levels, ideally that can be a very good level to buy with the stop loss of 1179 and a target of 1297 in the short term.
Okay, Sacchitanand, what about you, your individual stock bets?
Well, we have two stocks on our radar on the long side. The first one being Axis Bank. So if you look at the overall structure, the stock has been oscillating well within the band of around 700 to 730, and today we have seen it decisively closing or trading above 730. If you look at the daily ADX, it has swiftly moved to 26 level, which is again a very good indication that this particular momentum can get carried forward. So from a trading perspective, 740 would be the target. The stop loss for the trade should be placed at 724. The second buy call is on Muthoot Finance. If you look at the overall structure, it has been consistently being in a secular uptrend for the last 4 weeks. The stock just consolidated, and again we are seeing a fresh breakout here. The stock is sustaining well above the 700 mark. In fact, we are expecting that this particular move should extend right up to say 718. So from a trading perspective, a stop loss should be placed at 702, and long positions can still be added in Muthoot Finance.
Okay. Well, watch out for some of those names. So that's the ideas. Now, Dharmesh Kant of IndiaNivesh, of course, joining us on the show with his thoughts on the fundamentals, and it'll be important to have that. I believe my colleague Arpan should be joining us any moment to talk about this piece of news as well. So we'll get to them too. But telco is fairly important. Now, Dharmesh, good afternoon. Thanks for joining in. On a day when the markets have done well, let's talk about the winners first, and then we'll talk about the telcos which have lost out in trade today. There is a really big surge in Tata Motors. 2 days on a trot now, extremely strong gains. What have you made of the con call, the results and the con call? And is there merit in trying to own Tata Motors? If not, would you try to own any other auto stock, because all of them have also inched up? And conversely, if not an auto name, would you own an auto ancillary? What's your thesis here?
Yeah, good afternoon. See, Neeraj, market is always over-optimist or over-pessimist. So this is the nature of the market, and that is the beast we have to deal with. As far as Tata Motors numbers and con call is concerned, I don't find, it was very encouraging or there is merit in owning a Tata Motors as of now. Because the Brexit deal still is looming, it's not through. At the same time, 1 quarter or 1 month good number, doesn't over well. And look at the margin of JLR, which operating margins, operating profit has come good, but the margins are so low. You are in a luxury segment, and the beauty of luxury segment is high margins. So it's in excess of 10-15% kind of an operating margin Tata Motors should be enjoying. So I don't find that there. At the same time, the sustainability of one of blips to be continued in the future is I don't think so. It's going to happen for Tata Motors. So it's an opportunity. If you are stuck in Tata Motors, or you have averaged out, you should be booking out. Coming back to the other part of the question, when other auto makers are concerned, I think Hero MotoCorp and two-wheeler segment is the one which one should be looking into. Maruti is again expensive, though the numbers may catch up to an extent, but still the valuation will be far beyond the catch-up which the numbers will do on a monthly 100 basis of sales. So Maruti I would like to avoid. But yeah, Hero MotoCorp, TVS Motor are two two-wheeler manufacturer which one should be buying into. Other than that, commercial vehicles, Scots or M&M has run up quite a bit. From here on, the risk reward issue doesn't look up very rewarding, so I would be avoiding them. Auto ancillary, I think Bharat Forge is one which merits more attention. Motherson Sumi, though Motherson Sumi is a stock which is doing great today, but I would be sticking my neck out and buying an auto ancillary pack, Bharat Forge and Amar Raja batteries. So these are the two auto ancillary picks one should be looking at. Fundamentally, I do think now the case is there when one should be doing cherry picking and sticking to individual stocks where they find comfort in and the valuations are comfortable.
Okay. And if a 15% surge in Muhurat trading was not enough, Tata Motors has carried out an encore into today's trade. Actually has bettered that. However, the gap between the A shares and the DVR is narrowing a little. Jatin Mota puts things into perspective, and whether buying the DVR for somebody who wants to own Tata Motors might be a better bet. Jatin, what's the prognosis?
Neeraj, as you were lightly mentioning about the DVR and the kind of discount that it trades to the main, ordinary share is something interesting, one needs to watch out for. Of course, the shares have run up almost 30% in the last two trading sessions, especially post the earnings. And we haven't seen much of a catch-up with respect to the DVR shares to the ratio at which it trades to the ordinary shares. Now, if you look at the last 3-year average, the DVR shares were trading in the ratio of close to 0.55 to 0.65 versus the ordinary shares, which means that they traded anywhere between a discount of 45% to 35% to the ordinary shares. But currently, if you look at the ratio of the DVR shares to the price of the ordinary shares, it's close to 0.45, which implies a 55% discount. More importantly, this 55% discount was last seen in 2014. So clearly, if you look at the last 5-6 years, ratio plotted on a chart, it clearly indicates that the discount is at a historic, high, and probably from here on there could be a decent chance that the DVR shares could, catch up with respect to the ordinary shares. Currently, the DVR shares are up, almost 18.5% last time I checked. to the ordinary shares which are up 17%. So today almost a 1.5% cover up has happened. Let's see whether or not the kind of mean reversion or the kind of 3-year average discount which was close to 50-55% is met in the near term.
Okay, thanks a lot for that, Yatin. So that's as far as Tata Motors and the DVR goes. Now, Dharmesh, the other bucket which is doing well is the metal names. Tata Steel, JSW, etc. have all moved up. Maybe trade optimism, maybe valuations, maybe a mixture of both. What's your thought here?
Yeah, I think it's a mixture of both, which is doing the round today, and it's more of a bounce back kind of a rally which we are seeing in metals. But still, I would like to avoid them. I mean, as far as valuations are concerned, JSW still does merit a buy on the steel counter and maybe a Hindalco. But other than that, be it Tata Steel or Steel Authority of India or Vedanta, that should be avoided. It's more of just a bump up trade which is happening now, because globally things have not changed for the metal as a space, and domestically also things have not changed. If you look at the steel prices, it has been falling month on month, and now Indian steel price is lower than the import, so you have an opportunity to export now, but then the takers has to be there in the international market, which is not just seen as of now. And speaking to various commodity guys, there is no traction in the market as far as the metal offtake is concerned. Just because some few numbers have come good in the automobile space, some optimism, rubber effect has built into these counters, but it's a trading opportunity to my mind, and I would be avoiding them as a basket.
Okay, that's the view on the metal stocks as well. And we were talking about the telecom companies which are faced with dues and penalties worth 92,000 crore rupees over adjusted gross revenues. The telecom operators have actually made representation to the government regarding the financial stress being faced by them. In fact, we're joined by Arpan Chaturvedi, who's on the phone line right now, talking to us what sort of representation has been made to the government. Hi, Arpan, thanks a lot for joining. What were the key takeaways and what are the key representation right now which the telcos are making to the government post this important Supreme Court verdict?
Besides, so the Supreme Court verdict as it came as a the telecom sector, there was a talk of financial stress in light of the Supreme Court judgment. Post that, the companies made representation, and now what we are learning is that the government has set up a committee which will be headed by the cabinet secretary, and the key suggestions or the request of the telcos that the committee will look into is: first is the demand for deferment of spectrum auction payments, which is due from the telecom service providers for the year 2020 to 2021, and this will be deferred. Is what the committee will look into. The other point on the agenda for the committee to look into would be the USOF charge, which is currently at 5%. And the TRA, the Telecom Regulatory Authority, has in their earlier recommendation have already suggested this to be reduced to a further 3%. And now the committee of which is headed by the Cabinet Secretary will look into this particular aspect as well. Apart from that, the telcos have also requested for a reduction in the spectrum usage charge, and in the agenda of the committee of secretaries, which will be looking into the demand of telcos, this also will be on the agenda. Apart from that, the government also expects the TRA to examine the aspect that whether there can be a minimum charge for voice and data services, which can ensure that the financial health of the telecom sector remains robust. And of course, this committee is likely to meet shortly, and is expected, the DOT sources say that they will submit their recommendations in a time-bound manner as soon as they complete their deliberations on it.
Arpan, any specific deadline or timeline by when the resolution could also come by?
There's no clarity on that particular aspect as to by when can the deliberation be finalized, but as far as what we know from the DOT sources is that the committee will be expected to meet shortly, and there will be a time-bound mechanism in which they have to submit, but the specifics of that we will learn in due course of time.
Okay, Arpan, we leave it at that note. Appreciate you joining us with those details with regard to the representation of the telcos to the government, and let's see whether there is any sort of resolution which comes by or not. But in a market like today's, when everything is going up, you are seeing selling pressure continuing for majority of these telcos, and especially Bharti Infratel. Remember, Bharti Airtel was scheduled to release its September quarter earnings, but they have deferred it to November 13th right now, and they will be looking at the Supreme Court verdict and then and decide how to go about it. Let me quickly take a technical check on this one. Sacchitanand, Infratel at 52-week low. Bharti Airtel, which staged a very smart recovery last week, is back in red today. Is there any trade to take here?
Well, I think both the counters are on a weak footing. In fact, if you look at Bharti Infratel, it has actually breached below a critical support zone somewhere close to 205. So I think this particular move can extend right up to say 180, 185 is what we believe. So I think trailing stop losses further should be ideal. In case if one has to create a fresh short position in Bharti Infratel, then the stop loss should be placed at 202 on a closing basis, but the expectation of a move towards 185 remains open.
Dharmesh, two-part question. One, whether or not this 25%, 27% fall in Bharti Infratel takes into account the negatives, and would you be an investor thereof? And two, would you even touch any of the other two telcos with a barge pole, considering the to and fro news flow that we are hearing in them?
Yeah, see, Bharti Infratel is a different, game than the Bharti Airtel or Vodafone Idea. So those are separate issues. Bharti Infratel we don't, cover extensively, so I won't be commenting on that. But as far as, the service providers are concerned, so see, they are stuck in a difficult web. So when the reason being the asset at which they, bought the asset and the revenue they earn from those assets, the per unit charges have been falling, sequentially over a period of time, whereas the asset were bought at a much higher price. The newcomers who were into the segment, they bought the asset at a very low price, and even if the per unit charge is low, they are making profit. So how to address this issue? That's the moot point of the question. And with these levies and charges, interest and penal thing coming into the way, from where they will get this money from. So it's a difficult situation. It's a unique situation in which both Bharti and Vodafone has been stuck, because the spectrums which they bought were a much higher price, and with the declining ARPUs, they are finding it difficult to service the whole debt. Forget about the new spectrums to be bought from. So I don't think either of them merits a buy. Vodafone anyways is less than 4 rupees kind of a stock, so one should not be looking at it at all. Even Bharti Airtel, there's no upside out there. There may be a trading bounces which you may get, but you cannot have a sustainable upside. And so has been the story for last 4 or 5 years for Bharti Airtel. At best, if you want to play with the guy who has been lucky in this segment, and that is Reliance. So you have to stick your neck out and buy Reliance if you want to play this story at all. Other than that, this entire segment is, I think very few people can make money by, buying Bharti or something like that.
Stocks which are trading at fresh highs for themselves include a Pfizer, which is up 4.5%, ICICI Prudential, which is up about 4%. I think Jubilant FoodWorks has bounced back today, so 1591, about 3.5%. Not bounced back today. What I'm saying is continued to move up, and it's up another 3.5% in today's session as well. So really good going there. Any thoughts on any of these two names? Actually, not Jubilant. We'll talk about Jubilant in a bit, Dharmesh. But Pfizer, which is the 8th day of gain for the company, or ICICI Prudential, which must be having similar days. I mean, maybe it's gone down on a day or two, but it's just had a remarkable up move in the last few days.
Yeah, pharma I would still like to avoid. Maybe, there has been gains, individual stories are there, but individual stories at best can be, the upside, the, secular nature of market is not there for pharmaceutical companies, so that should be avoided as of now. As far as life insurance companies are concerned, or insurance companies are concerned, they are the best bet in this present environment and the market in which we are into. Hardly any penetration they have made, and there are humongous opportunity to cut through the market, and they have been doing well as far as 10-12% kind of average growth. All of these guys have been tracking, be it HDFC or SBI or ICICI. All these insurance companies have been doing pretty well. So I think they are a must portfolio buy. In fact, I was not expecting that such a big price rise will happen so soon. But we have recommended to our clients to keep them in their portfolio from a long-term perspective. And if anybody is having a view of 3 to 5 years, these all are 2 to 3x kind of stock, even from present levels where they are standing. So all three are a very good bet according to me from investment perspective. One should be holding them in their portfolio.
Well, okay. But ICICI Pru, which in the last few days has just done remarkably well for them itself. So good going there. Dharmesh, good having you as always. Thanks for taking the time out and being with us. Really appreciate your time.
Thank you so much.
Trading at new highs for itself, ICICI Prudential, specifically on the charts, Amar Singh, 5004, 505. Would you trade it?
Yeah, I would say that the stock definitely continues to be extremely strong on the different time frames. And however, if you look at it, it had made a high of 509 in September 2017. So somewhere around 500, 505, 510 could act as a major and crucial resistance level, because we are talking 2 years back this level was there. So I would not recommend fresh buying at these levels, rather profit booking around 505, 510 at the current levels. Only the stock consistently sustains above 510, 520 zone, then it is headed high towards 545, 550 levels.
Okay, remember ICICI Pru is the only insurance company in the derivative space as well. So if one has to play through the F&O market. But we've been talking about the insurance companies. Even the non-insurance players have gone up today. So pull up something like GIC Re, that's seeing strong gains of 13 to 14%. I believe, yeah, it's up 13%. And even New India Assurance, that's locked in upper circuit of 10% in today's session. So the gains that have come in are across the board, life as well as non-life insurance companies. Besides this space, I'm sure there are a lot of stocks which are buzzing. So let's find out which are the Fab 4 stocks which feature in Sharad Dubey's list. Hi Sharad, good afternoon.
Good afternoon, Navneet. The metal space is buzzing today, and the first stock I've picked up is NMDC. The stock is up more than 3% after Citi upgraded the stock, to buy from neutral, hiking the target price to almost 125 rupees. The brokerage stated that the mining industry changes will be positive for the company, as well as the lease expiry will happen for the iron ore mines. They expect that the net profit estimates will grow between 8 to 30% in FY21 on FY22 on base of strong prices and resilient volumes. Up next, we are having GVK Power and Infra, which is stuck in the upper circuit of 5% after three financial powerhouses, Abu Dhabi Investment Authority, PSP Investments, and NIF have agreed to spend almost 7,614 crores in company's airport business. So the proceeds will be taken down to pay down the debt and also take in stake from the South African investor. Up next, we are having DCM Shriram Industries, which was up almost 3%, but now it's up almost 0.5% after it came out with a strong quarterly results, with the sugar segment going up almost 11%, and also the margins expanding by 500 basis points to almost 14.2% for the company. And the last stock of the day is Welspun India, which is up almost 4.7% after it has received final approval from US courts regarding a settlement case in the claims regarding the past marketing and selling of company's premium cotton home textiles. So it's a positive for all these companies. Back to you.
Okay, Sharad, thanks a lot for bringing those Fab 4 stocks of the day. And revisiting the markets, we are still maintaining or rather sustaining the gains. Nifty is up about 150 points, a tad below the 11,800 mark right now. And Bank Nifty is up about 350 points in trade. A couple of your beaten down stocks are seeing some short covering rally maybe. So pull up Yes Bank, which has been moving higher in the last 3 to 4 sessions. That's up another 4 to 5% in today's trade. Besides that, even RBL Bank or something like Indiabulls Housing, all of them have staged some bit of recovery in today's session. So RBL is up about 6%. Indiabulls is also one of your top F&O gainers for the day, which has rallied about 14 to 15%. Remember, the stocks recovered nearly 30% from the 52-week level that we've seen at the start of this month. Sacchitanand, any of these beaten down stocks which are staging some bit of recovery, would you place a bet?
Well, it will be very difficult to trade them, and in fact, if you look at the overall structures, they are still on the weakening side. So I would rather pass and not create any fresh long or short positions in any of the counters.
And the other one, which has hit its 52-week high today, is pull up Adani Enterprises. That's also sitting at a day's high. Remember, the start of the day, there was a news which came in that the company has signed an MOU with a US company called Digital Realty, and the stock's up about 7%. Amar, on the charts, at these 52-week high levels, 195, what would you advise if someone's sitting with a long position?
Yeah, I would say that someone sitting with a long position, they can hold on to the levels, because if you look at it earlier, it was having very strong resistance coming around 180, 182 levels. So that has been taken out, and it's strong on the very strong on the weekly, daily charts, monthly charts. Yes, it has moved up and breached out of this consolidation zone. So one should definitely hold on to the stock. The stock has a potential to rally towards 235 to 40 levels.
Okay, well, so some names on the charts which are looking well good for a trade. Let's put it that way. Muthoot Finance, ICICI Prudential, and ICICI Bank at 478 is hitting fresh life highs for itself. Good time to get in Avinash Gorakshakar of Joindre Capital Services on the show. Avinash, good having you. Thanks for joining in. Happy New Year to you.
Yeah.
A slightly tough one, Avinash. I'm asking you to choose between two names which are currently the banking favorites, Axis versus ICICI Bank. Why would you choose whichever you choose?
My guess is I think ICICI Bank would definitely look attractive even despite the fact that it's run up quite significantly. I think the markets are happy that slippages have come down, asset quality has improved, and most importantly, they still have a lot of added value in the terms of their subsidiaries. ICICI Pru is also doing well. So I think if you look at the longer term kind of business traction for ICICI Bank, most of the asset quality troubles are behind, and the markets are probably looking at a stronger kind of growth for FY21. Hopefully, I think corporate banks definitely should do well next year, and I think within that, ICICI Bank, Axis Bank should do well. But considering the fact that ICICI Bank has a fair amount of clutch of other related businesses also, I would believe that apart from the core business, the other subsidiaries would also make a lot of money for them. So clearly, hopefully, if the capital markets do well, the other, relatively, smaller, business, that is the broking and the wealth management business, that should also, rake up a pretty good set of numbers. Although Q2 numbers are not all that great. So I think I would definitely go for ICICI Bank, and obviously the second choice would be Axis.
Can I throw in SBI because ICICI has already run up? What about SBI? Slippages were lower this time around.
My sense is, Navneet, numbers were definitely good, and I think one good part was asset quality has also improved. I think the markets were definitely happy with the number, but I think a large extent, the SBI Life share sale also boosted the profitability. So I would believe that, maybe another quarter one would like to see what has been the traction, because in most of these PSU banks, asset quality and, sustainability of numbers has always been a question mark. Although at these levels, I agree with you that, most of the negatives seem to have been, factored in. So I think somebody who wants to take a risk on the PSU banks, I think this could be a good choice. I mean, you have to obviously factor in the risk that probably some other asset quality account doesn't go out, create a little bit of problem for them. But otherwise, I would believe that maybe a price target of around 320, 330 looks very much possible. Even the management commentary this time was pretty good.
Okay, that's about the banking space. But one stock which has been reacting to its numbers all through the day is Marico. It's down as much as 5 to 6%. Remember, so far the investment thesis for Marico was that in terms of valuation, it was trading at a discount to its peers, and the other was softening of copra prices. But Avinash, it's been a dampener when it came to volume growth, only 1% for domestic, and it's no longer that cheap compared to its peers. It's trading at 41, 42 times now. What would you do after looking at the numbers?
No, I think numbers are definitely negative and quite disappointing. I think volume growth has definitely been much below the street estimates, and I think, in fact, the market expected both volume as well as margins to improve significantly, because their main input, copra prices, have been quite soft for a pretty long time. So I would believe that some amount of underperformance on the counter could continue. I think the management would obviously have to make a conscious effort to ensure that volume growth again comes back to levels of at least 5 to 6%, and only then one could get a little more comfort considering the current valuations. In fact, I would believe that now companies like even ITC, which presented a decent set of numbers, for a long time it's been rather remaining in a range. Probably this could be one of those stocks where one could possibly see a reasonable amount of re-rating going forward.
Okay. Well, 367 and counting. Copra prices maybe saved the day for the quarter, but the market reads through it and then looks at what next, and what next hasn't, or maybe is not looking all that attractive for Marico. It's looking reasonably attractive for Jubilant, I must say, so do watch out for that one. Stocks which have gained in the last few minutes include a KPR Mills. There is strength there. There is PTC India, which has gained a little bit in the last few minutes of trade. And Indiabulls Housing continues to rise and shine, 221, now about 16.5%, so really good going for that one. The stunner has to be Adani Enterprises. If we can pull up that stock for our viewers, in the morning at least it was up and about 196 or 197 and currently trading at the highest point of the day. This year's chart for Adani Enterprises would be quite interesting as well. Mind you, today's volumes are nothing to scoff at either, but look at the kind of gains that it has made this year, and largely on account of the move that we've seen in the last one odd month. Now, Avinash, all of these group companies are doing really well for themselves. Adani Enterprises in particular, varied business nature, multiple businesses as well, I presume, or multiple segments out there. How do you value this? I don't know if you've studied this or not.
In fact, Neeraj, we recommended Adani Ports to our clients. So, Adani Enterprises has not been within our coverage. But I think within the pack, I think Adani Ports is something which we have been actively, recommending to our clients, especially even post the buyback. I would believe that, this is one business which possibly has several levers for growth. And obviously, looking at the kind of balance sheet and the kind of deleverage which the management has already hinted, I would believe that here this is a price which possibly could offer a decent risk reward. Adani Enterprises, frankly, we don't, cover it actively.
But it's active in the session today. Sacchitanand, Adani Enterprises at the levels that it is trading at, do the charts suggest any kind of trend?
Well, it has been in a super trend. In fact, if you look at the entire setup, since last 3 weeks, there has been a very strong momentum, and that particular momentum has been carried forward week over week. So from a trading perspective, it will be very difficult to create any fresh long positions, but in case if someone is holding them, I think the ideal stop loss for this particular trade now is placed at around 190. On the higher side, there is no significant resistance, but I think in case if the stocks manages to sustain about 200 mark, I think probably we may see an extended move towards say 220, 225 very quickly. So I think it's better to keep a trailing stop loss mechanism. 190 would be the stop loss for the trade. In fact, it will be a very important level. In case that level is breached, then probably the ongoing momentum could get stalled, and we may see some consolidation. But as of now, I think the momentum and the trend has been strong, and 190 should be the stop loss for the trade.
Adani Gas, which had got the total investment, and I wonder if that one at that 150 odd level, has it gained? No, it hasn't. So that one has stayed steady, hasn't really gained too much, but it trades at a substantial premium to its peers. So do watch out for this one. And Adani Green was the other one, which had a fabulous move in today's session. A bit soft, but the last 1 month or the last 3 months has just had a remarkable up move. Do watch out for this one as well. What's perched well is Maruti Suzuki, 3.5% higher at 7705. Avinash, for somebody who's missed the bus in Maruti, is it a good time to buy that? Or would you say Tata Motors gives you a better bang for the buck? Or would you go in for some other auto name, large cap?
I think looking at the kind of valuations for Maruti Suzuki, I would believe that, Neeraj, probably a price of 74 or maybe 7,300 could be a good entry point. Our target price, at least for Maruti, is about 7,800. So I don't think you could get a very, encouraging risk reward. But Tata Motors definitely, looking at the kind of traction and the commitment from the management, Tatas have again invested about 6,500 crores here. Hopefully, if the next quarter is good and we see better traction, from even the domestic side of the business, one could definitely see that most of the damage or most of the bad numbers are out, and probably, maybe from the Jan to March quarter, you could see a good revival. So I think at this level, despite the fact that Tata Motors has gone up, maybe a price of 155, 160 could be a good bet for somebody who wants to bet for the next, say, 12, 18 months.
Okay, and while talking about the auto space, let's get a technical check on Motherson Sumi. Remember, because of the good numbers that we've seen for TAMO, Motherson has not come out with its September quarter results. That too gets its majority of its revenue from the UK market. Very quickly then, Amar Singh, with the 10% move in Motherson Sumi, it's inching very closer to its 200-day moving average as well. Would you recommend someone to take a fresh long position now at current levels of 123?
No, I would not recommend long at current positions, because somewhere on the upside, because if you look at today's high, that was around 126, and earlier also in June it had made a high of 128, and from there it had corrected all the way down towards, if you look at it, almost 90 odd levels. So 125, 130 is a crucial resistance zone for the stock. So ideally one should look at booking profits If it sustains above 128, 130, then it could rally towards 145 levels.
Okay. Let's get a sense of, stay on German, so much more to talk about. Let's get a sense of what dealing groups are recommending in the session today. Darshan and Yatin join in with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so good afternoon, Neeraj. One of the stocks that's been spoken about is Interglobe Aviation. Is down almost 2% in trade, 2.5%. Dealers indicate that there are still sell flows that are left on Interglobe Aviation, and over the next few days that flow probably will continue. So that's the first stock that's been spoken about. Today, some of the beaten down names have actually seen a lot of short covering. IndusInd Bank is one of them. It's up almost 2.5%, almost 3%. Dealers believe that the short covering probably will continue. And two stocks trading at 52-week high, Reliance Industries and ICICI Bank. Dealers believe that the momentum buying will continue. There are significant amount of buy flows in both of them, which they believe will continue. But Yatin has a few more stocks.
Neeraj, have a look at the entire steel pack. This is one sector which has been underperforming. Finally, some good bounce back seen there. If you look at JSW Steel, was up 5% last time I checked, and a 3% move coming in the last 5-7 minutes of trade. So clearly, a lot of traction seen in steel stocks. Dealers are recommending a buy today, sell tomorrow kind of a strategy here. Tech Mahindra is also one stock wherein dealers are indicating that at higher levels, dealers are initiating some short positions. In general, they do expect the upside to be capped for technology stocks, and hence have initiated some short positions. And BEML is also one stock in the cash segment wherein HNIs are said to be buying. So a lot of these dealing room desks which are advising to the HNI clients have been buying shares of BEML from the open market.
Okay, we will watch out for each of these. Thanks a lot for that, Darshan as well as Yatin. So that is what dealing rooms are recommending in the session today. More market voices. Madhu Kela of MK Ventures says there is a polarized nature in the markets due to the reduced competition. In an interview to BloombergQuint, Kela says he expects to see a different level of value creation due to companies changing hands over the next few years. Listen into a slice of that conversation.
This time around, markets are giving you that opportunity, because let us say if there were 100 people who were serving a business, obviously 50 of them in my language have gone into coma or an ICU, and so the balance 50 are actually serving the opportunity.
Yes.
Hence the competition has got reduced, which is why you are seeing such polarized nature of the market.
Which is the case of NBFCs.
Yeah, which is the everywhere.
Yeah.
You can see that in pharma companies,
Yeah.
you can see that in FMCG companies, you can see
True.
that in NBFCs, you can see that in banks. There are 40 banks listed, but only 5 are doing well because all the deposits, all the borrow, and they are in a seller's market. Today, if you say that I can lend you 5,000 crores, and I'm the only guy who is willing to lend, then I can demand at 25 basis, 50 basis more cost. So that is why you are seeing this polarization in the market. However, let me tell you that I broadly categorize this into 3 parts. One, this holier than thou companies, which are basically any multiple, anything is justified.
You're just ready to pay any
Absolutely.
amount. Right?
The other spectrum of the market is untouchable, which is basically the people who have gone into absolute distress, very, very unorganized balance sheet, and very severe level of problems. Then there are these mid companies where there is a perception issue which we are talking about. The reality is not as bad as it is looking like. So that is where
they've been painted with the same brush.
Yeah, that is where the real opportunity in my view is. A lot of these companies will emerge from these perception gaps, which is what we have seen in the past. Some of them will change hands. So like, just give you an example, just as an example, and please put all disclaimers of all kinds. We are not recommending anything. Like, for instance, let's say so many companies which have changed hands, where the management has changed, and you've seen the kind of value creation which is happening. So I personally feel over the next few years, a lot of companies will change hands, and we will see a different level of value creation.
This underperformance in mid-caps we've seen in the last 2 years versus the large cap index. Do you see that reversing anytime soon?
I am not actually talking about any index or industry. So there's no point, it's futile to talk about indexes, because we don't buy anywhere. I'm not buying mid-cap index.
It's the individual
businesses. I'm very confident that I can identify 15, 20, 25 companies out of that bracket, which will hopefully sail through these difficult times. And when the good times come, there will a lot of market participants will participate in those companies. So this is where all your skill of identifying the right promoter, the right valuation, the right industry, the right blend of everything, that comes. And I am telling you, there are those opportunities which are available in the markets today.
How do you expect the index, leave alone levels, but how soon or how further down the line are we going to be able to rescale those record highs that we made?
I think index-wise, it can happen in the next 12 months also. But I am telling you one thing, very unequivocally, very clearly, that we are coming out of a very difficult phase. There are ample opportunities which are available for an investor. But if you are a person who bought today, and if you want to review it after 3 months, after 6 months, there is a chance that you will get frustrated that things have not moved. Because I have seen so many cycles in my life. We bought stocks, they did not do anything for 3 years or 4 years. But the companies continued to do well. And then you had a rocket 1 year, then the stock went up 10 times. So I'm saying we are in that kind of a phase wherein there are a lot of good bargain companies which are available, which are like, in my view, they are bear market survivors, and they are available at depressed valuations. So as an investor who is looking at from a 3 to 5 year time horizon, I think there is enough bargain opportunities in the market, and you need not necessarily worry about where the index will go, because anyway you don't buy index.
True.
You should worry about what you buy, and that should go up.
All right, just 10 minutes to go for markets to shut shop. So let's get you some closing ideas from our technical experts. Sacchitanand, any BTST or any STBT for tomorrow's trade?
Well, the momentum in some of the metal counters is very interesting. In fact, JSW Steel, the way it is, forming a base somewhere close to around 230, I think this particular momentum can extend right up to say 242, 243. So from a trading perspective, a stop loss should be placed at around 230, and long positions can still be added in JSW Steel for a target of around 243.
Amar, what about you?
Yeah, I would say that one can look at Titan because this stock has witnessed some correction in the last couple of days, but seems to be forming some support. So this is one stock one can look at buying at the current levels.
Okay, Titan and JSW Steel. By the way, Bosch has risen nearly 7% in trade right now, and that's sitting at levels of 15,730. So good, consistent gains, I think, throughout the session. RBL Bank is the other one. We were mentioning how a couple of your beaten down stocks are recovering in today's trade. So that too has seen gains, and something which continues to reel under pressure today is, of course, Marico, which we've discussed. Apollo Hospital is down another 6% in trade. Avinash, Apollo Hospital, we spoke to the management a while back, of course, the reports and on a particular blog which have highlighted concerns related to the related party transactions and also regarding the promoter pledge. What have you made of it? And because in terms of financials, I think they've been doing pretty well in the last 2 or 3 quarters.
No, I think the management has also clarified this point, and I think the stock has, reacted negatively to this news flow, considering some related party transactions. But I think clearly within the hospital space, Navneet, this is possibly the best positioned stock. And I think if one were to look at the long-term, kind of business model, I think this company has definitely got the advantage of a stronger geographical reach and a very strong, presence within the hospital space. So I would believe that any weakness should be used to buy this stock. I would believe that this weakness may be there for a couple of days, but hopefully I think this stock is something which most institutional investors and HNIs would definitely look at buying this stock, because considering that this is not an easy business to get in, I think there are very few players of this magnitude operating in this space.
Certainly are. I must say I'm really impressed with the kind of moves that some of these corporate-facing banks are making. Avinash was speaking fundamentally about ICICI Bank and Axis. Technically, just look at Axis Bank, 4.38%. It is at 742. What a move we've seen in this stock ever since the QIP or the fundraising. event was out of the way. The last 1 month, I think it's gained from 650 to 742. So quite a smart move, maybe more than that also, about 6.5 to 7%. But that's from a slightly higher base. From the lows, it's gained quite a bit from those 656, 655 kind of levels. From a trading perspective, 4.44% higher. Amar, would you carry home a long position in Axis if you had one?
Yeah, I would say that one should definitely hold on to Axis Bank because if you look at Axis Bank on the weekly charts, it has moved into, I would say, positive in one of the technical indicators, and also it has taken out its last week of September's high of 733. So 730.35, which was earlier a resistance level, Axis is trading above that level. So I would say one should definitely carry the stock because the stock has got further momentum and it could rally towards 760, 765 levels.
You know, a couple of other things. One, two names, both PSU names which are gaining today. In the Nifty 500, they are amongst the top 10 gainers. One of them is Shipping Corporation of India, 9.75% higher. And mind you, it's had a gain which is bigger than BPCL by any stretch of imagination in the last 1 month. The second one is ITI, which got some slew of orders. The results were good. The management came and spoke about how they expect the numbers to be substantially higher than what they've done in the first half. You always take these things with a pinch of salt, but ITI management was extremely confident about what they would do. Now, Avinash, either of these two names, if you track them, if you looked at the ITA numbers and the commentary, then that, or if not, Shipping Corporation of India and the kind of move that it has had.
My guess is I think Neeraj, Shipping Corporation has already gone up by almost 70-80%. So looking at the kind of management commentary the ITA management posted, and hopefully some sort of strategic investor coming in, I would believe that most of these PSU stocks have already been trading at very low valuations, good dividend yields. So hopefully ITI could be a good bet, presuming that earnings could be sustained, and obviously we could see better earnings visibility, because in this business for some time we had seen that 1 or 2 quarters were not bad, good at all for ITI. But hopefully if that business traction continues and the order book visibility improves, then I think you could possibly see a mark of at least 100 odd rupees, because liquidity in these counters as it is very limited. And I think the markets are obviously betting on the fact that there is some value in these PSU stocks, considering the fact that valuations have always been low for these companies, despite the fact that their cash flows and dividend payouts have been quite attractive. So I think from a longer term perspective, hopefully numbers improve, you could see a better kind of a re-rating here.
Avinash, we'll leave it at that. Thanks much for taking the time out and being with us. Appreciate your time. Well, this one is steady. Actually, both these names. Sacchitanand, very quickly, ITI or Shipping Corporation of India, either of them?
I think going by the momentum, Shipping Corporation of India, still there's a trade setup which is available. I think the stop loss should be placed somewhere close to 74.5. If you look at the overall structure, it's a fresh breakout from a pennant, a bullish pennant, which is indicating a price target somewhere close to 68. So I think going long in Shipping Corporation of India would be ideal. The stop loss for the trade is also very modest, 54.50 on the lower side.
Well, when was the last time you heard people fundamentally and technically being bullish on Shipping Corporation of India? That's the beauty of this word called divestment. It just gets the right kind of feelings into a stock and in the minds of a trader stroke investor. Let's start wrapping up the markets. Great feelings for the bulls in the market as well. 1.5% at close. This is not the kind of start that we had, nor the kind of move that Asia had for the better part of the day today. So we're doing our own thing and doing it well. And for a change, even though banks and Axis and ICICI have done well, it's not led by banks. It's led by the others. There is TCS, Reliance, Metals, all of which are participating in the session today. A broader end of the spectrum, the mid cap and the small cap indices, they've not done as well. Maybe the mid caps have, the small caps haven't, but I think we'll still take it. The first day of the new, first full trading of the new somewhat, I don't think there are any complaints whatsoever. You could maybe argue about the nature of the stocks that have moved, but hey, that's okay. What's done well today? Tata Motors 17%, JSW 7%, Tata Steel 6%. There is strength in Tech Mahindra about 4.5%. Then a couple of banking names, Yes and Axis. Maruti 4% higher, and then the heavyweight TCS chips in. I think it is probably the best or the second best performer by contribution in today's session. What's not done well? Fourth day on a trot, Bharti Infratel corrects. Bharti Airtel 3%, Ultratech about 1.5%, Kotak about 1%, Z about 1%. By the way, Dish has been taken to the cleaners, I must say. and BPCL and Power Grid amongst others that have also corrected in the session today. But largely, the day belonging to the gainers, save for the two names on the telecom side. Navneet, what about the broader end of the spectrum though?
Well, Neeraj, the rally was across the board, but nevertheless, I guess frontline indices outperformed. But there were a lot of gainers even in the broader markets. Let me start off with the beaten down stocks. So one of them being Indiabulls Housing, which has recovered about 30% now from its lows that we had seen at the start of this month. So that's closing with gains of about 14%. You also had Adani Enterprises, which gained, and that one touched its life high level. So closing with gains of 5%. Remember, they signed MOU with a US company called Digital Realty. Motherson Sumi staged a good recovery. In fact, now the stock's trading very close to its 200-day moving average. The numbers have not come in, but now maybe expectation building in, considering it derives some of its revenues from the UK operations after Tata Motors. Let's see if this one throws a surprise as well. Bosch was the other one from this space, which gained about 7% in the second half of the trading session, and that's closing with good gains as well. RBL, a little bit of recovery seen there, maybe a short covering bounce after the stock had corrected. Muthoot Finance touching life high levels. Remember how the gold financing companies like Muthoot and Manappuram have been outperforming since the IndiaNivesh crisis. From the insurance space, you had the non-life companies like GICRE and New India Assurance, which was once again locked in upper circuit with gains of 20%. So buying interest continues at least in this pocket. And ICICI Prudential, a life insurance company, touching its 52-week high levels today. That's closing with gains of 4%. Nevertheless, there were losers as well. So Marico reacting to its earnings. The volume growth, domestic volume growth of 1% was a big dampener this time around, and the stock's closing at 52-week low. Apollo Hospital, some reports emerging around the related party transaction that the company has undertaken. And of course, one concern which has been there in the market for the longest time, and that's on promoter pledging. Let's see if that comes down or not. And Indigo, after posting weak set of numbers, and now the regulator has asked the company to change its engine for 16 aircrafts within 15 days, and by the way, if they don't do that, the regulator has also said that will be grounded. And United Breweries, in a good market like today's, could not gain momentum. That's closing with cuts of about 2 to 2.5%.
Well, but a splendid day of trade, and one that, like we said at the start, I don't think too many of us anticipated we'll have a close like this. But all is welcome. The contributors should come up. Reliance, TCS, and then maybe a few others. But I think those two will be top of the pile. Yeah, Axis Bank too, Navneet is talking about it, 4.5% higher in trade. A pretty impressive list of contributors. We don't have the Bank Nifty being the principal contributor, which is a great thing, because the HDFC twins haven't quite participated today.
Yep, in fact, Nifty is just about 2 to 2.5% away from its all-time high levels. Bank Nifty is still underperforming. It's about 5 to 6% away from its all-time high levels. Let's see whether that catch-up game happens or not. But in terms of markets went up, you did have the volatility also going up in this monthly expiry week. May not be a very comforting sign, but India Week's today's closing with gains about nearly 5% around the level of 16.3. In terms of participation, let's see how the turnover panned out. From the cash side, we've gone up with good amount of participation as well. That's a positive sign. 44,000 on NSE cash, and for the NSE F&O turnover, 12.3 lakh crore. Considering this is the monthly expiry week, I think it has to be on the higher side. So good participation on a day when market has moved higher, Neeraj.
Yeah, and decent going, and of course the market breadth would have been marginally positive. But the key is, can this sustain? Difficult to say, but let's ask our experts. Sacchitanand, just wondering, can the Bank Nifty in the run-up on this expiry week now start to chip in better? Because today was firmly the non-banking stocks which did well.
Well, absolutely, yes, Neeraj. In fact, I think from tomorrow, 29,900 would be a critical juncture in case if we see Bank Nifty, sustaining above this particular level, or probably, a trade about 30,000, and then we may see Bank Nifty again taking the lead. But as of now, I think, there is some kind of a discomfort. We have already seen a good run up in some of the private names, and, they are showing signs of exhaustion. So I think it will be a very tricky situation. But from a level perspective, I think a close about or sustenance about 30,000 is something that will be, something which most of the traders would be eyeing on. On the lower side, I think, in case if we see a slippage below, say, 29,700 before that, then probably we may see this entire phenomena of last 3 trading sessions again, getting into a sell-on mode. So it will be a very interesting scenario which has shaped up. I think from a bullish momentum perspective, Bank Nifty needs to surpass this headroom of around 30,000 very quickly. In case if it fails, then probably we may see a corrective move shaping up quickly within this particular week itself.
Amar, people who have missed out in the rally, let's see tomorrow if we have a flat opening, would you advise taking a long bet then?
Yeah, I would say that being on the long side definitely is important, because what we are seeing on the charts clearly shows that there is more on the buying side. As far as Nifty is concerned, I would say any pullback towards 11,730, 750 zone, that could be a good level to buy, because that's a very strong support zone. And on the upside, Nifty needs to consistently sustain above 11,820, 825 levels for the next rally, and also this being expiry week, so we're likely to witness volatile trading as well.
Okay, gentlemen, we'll leave it at that note. Sacchitanand as well as Amar, thanks a lot for joining us and taking us through your technical views on the markets. Well, with that, it's a wrap on this edition of Countdown. Goodbye from Neeraj, my side, and the entire team who put this show together. Stay tuned for Market Wrap. That comes up next.